Okay, we are actually at the top of the hour. So I'm going to thank those of you who have joined, and thanks of you, those of you who will be listening to the recording at a time that will work for you as well. You know, I will say that for the Limited and Long-Term Care Center, having Careful as our newest sponsor is a significant addition. And you know, one of the things about dealing in the area of extended or long-term care, it's what isn't said that is equally dangerous in terms of financial and personal and psychological stability that figures into this particular area of protection. And because those conversations are difficult to have, I really am enthusiastically happy to have Careful, because this is a tool that is going to help people where these awkward conversations can lead to real problems and family difficulties way beyond what you would expect. So with no further ado, I welcome Careful as a limited and extended care planning sponsor, and I will turn this over to Todd.
Great. Thank you, Carol. I'm going to try and share my screen. Hopefully everyone can see this. Thank you, and we're thrilled to be here. I'm Todd Rovak, founder of Careful. Absolutely thrilled to partner with NAIFA around what we call financial caregiving. And that term may be familiar or not. It's a concept we're going to get into, but everyone on this call is part of the financial caregiving effort. And that's why we're so excited about this moment and this partnership. You'll hear from me for a little bit. You'll also hear from our head of education, Cameron Huddleston, in just a bit, as well as Brian Holtz, NAIFA member, who we're absolutely thrilled to have join us today and grateful for that. But first, just to frame things, we are talking about a technology tool today for financial caregiving, and typically technology in our space is thought of as administrative, or it's thought of for speed and efficiency, or it's technology for a delivery mechanism, or it's technology for compliance, or at worst, it's transactional, just a purchase moment. And today, though, we want to talk about new technology as a relationship builder. And because it's technology as a relationship builder, we are really talking about this as technology as a business builder. And that's the lens in which we want to introduce this tool today. I hope you come away with an idea about how financial caregiving technology and Careful can be a very simple baseline part of a relationship-driven practice. And that's really the lens through which we want to talk about today. So what is financial caregiving? You know, in addition to an aging US population that this group knows about, there are 45 million people in the US who are financial caregivers, those looking after the daily money of someone else. Think of it as a set of activities. It's oversight, people logging in as their parents, looking for fraud. There's 50 billion of fraud annually, fraud from outside, but fraud from within the trusted circle as well. The son, the brother, kind of moving money out systematically and slowly, what we call systematic drain. There's contribution, people commingling money, collecting from their siblings, terrible idea, but it's the way that it happens today. Managing funds of other family members. There's 190 billion of money moving around in annual spend here as well. It's coordination. This is up to a 20-year financial relationship, this life stage, where a lot of different activities and sub-activities happen, setting budgets, ensuring bills are paid on time. It's 100 daily things, but a lot of time and a lot of emotion. And I assume that maybe some people on this call have done this for themselves or done this for a parent. Everybody gets here. It'd be unusual if you hadn't, or maybe you know someone that has. And if you have done this, you know how unnecessarily hard it is, how unnecessarily difficult it is in today's environment. So that's a problem. But why do we care about solving that problem? It's because banks and advisors are losing what we call the wealth transfer battle. There's 24 trillion in generational wealth transfer that's already underway, and 9 out of 10 people will not use their parents' advisor or not use their parents' bank. So you have 24 trillion moving, and most advisors won't catch 90% of that and keep it within their practice. Just overall, just a lack of engagement by people when not in dire need. So what's missing is some infrastructure for relationship continuity. There are huge gaps in between the buying of a policy or transactions, huge gaps in between the relationships you have with an older adult and their adult children. And so because of that wealth transfer battle, the answer is the bridge, is simple financial caregiving tools for clients and prospects. And that's what Careful is. Careful is a financial platform for older adults, for advisors to give to older adults, for underserved financial caregivers who are taking care of older adults, and the financial professionals who support them. A way to do that efficiently, easily, let the technology do the work so they can have high impact conversations. And we'll get into detail about what it does, but just want to give you the overview quickly of the first 3 things. Careful provides smart, personalized, what we call financial caregiving monitoring. We can watch accounts and look for things that banks don't look for, that disproportionately apply to older adults. I'll get into the details of what those things are in a little bit later. The second thing is objective data-based communication among a circle of trust that gets you to what we call less fights, faster fixes among families to help protect these assets. We want more eyes on things. We want less hands in other people's accounts, but more eyes and transparency. And then finally, we empower both generations with content and education. When do I need power of attorney? When don't I need power of attorney? How do I do my parents' taxes? And we give this to advisors and insurance companies to empower their clients and prospects with this content, and a community to support them. So it's a technology service, all intended to keep the adult in control of their finances, independent for as long as possible, protecting without needing to take over, without power of attorney. They stay in control. And that's really the key driver of this. It's that big white middle space in between I take over and I do nothing, right? And that's how we fill the gap and build a relationship. So advisors are using Careful, are providing the Careful service to their clients, and they do it just by simply turning it on. They do that to impactfully support a deeper relationship across 2 generations, to retain the assets that they have, to bring in the children of those older adults, to bring in new clients. And as they establish that relationship, to open a marketing channel for other products, from long-term care insurance to wealth management and other forms of insurance. So finally, before I turn it over to Cameron, just a dramatic example of what's possible with the data that we have. Many of you have seen this. I brought this up in NAIFA circles, but you might have seen the Johns Hopkins study from last year that concluded that dementia and Alzheimer's can first be diagnosed in the wallet up to 6 years before it can be diagnosed in the doctor's office. In the financial behavior and financial transactions, we can see things up to 6 years in advance. Missed payments, credit score hits, late bills, what we call sloppy paying, a change in the pattern of when people are paying their bills. Older adults are really good at faking it on a phone call, but actually the transactional data tells a different story. We're really writing the rule book for this life stage. So think of the impact you can have if you're able to provide the tools. Some of it's pretty dramatic, like this. And so we're capturing, it's not just, by the way, dementia, but we can help with decumulation, see opportunities to help consolidate assets, insurance, a specific wealth management offer. There's a lot you can do when you see the data, and that's really the breadth of what financial caregiving tools and technology can do. We have a lot of expertise in financial caregiving at Careful. The top of the mountain for us is our lead expert, which I'll introduce to you now, Cameron Huddleston, who is our head of education and content. She also wrote a book that if you haven't read, you should, called Mom and Dad, We Need to Talk. She has written really the book on financial caregiving and how to have essential conversations with your parents about their finances. So we will hear from her now, and then joining her will be one of your own, member Brian Holtz. So with that, I'll turn it over to Cameron.
Thank you. Thank you, Todd. As Todd said, I am Cameron Huddleston. I am Careful's Director of Education and Content. I'm also a longtime personal finance journalist. And as Todd said, I'm also the author of Mom and Dad, We Need to Talk, How to Have Essential Conversations with Your Parents About Their Finances. And I was inspired to write the book, not just because of my experience as a personal finance journalist, but as a financial caregiver for my mom, who had Alzheimer's disease for 12 years. When my mom was diagnosed with Alzheimer's, I knew that I was going to have to be the one to help care for her and help manage her finances. I was the oldest daughter, and I was the one who lived closest to her, and she was living alone. And so she was going to need help, and I was going to be that person. And I can tell you, when someone is diagnosed with Alzheimer's disease, usually the doctor doesn't tell you that this person is going to need help with their finances from that point on. You know, in my mom's case, we were just simply sent on our way, left to figure out everything on our own. Fortunately, I'm a personal finance journalist, so I knew what steps I needed to take to protect my mom's finances. I knew I needed to get her in to meet with an attorney right away to update her legal documents and to name me her power of attorney. I knew I needed to keep tabs on her spending in her bank account. I knew I needed to protect her from scams. And I knew I needed to protect my mom from her own impaired financial decision making. But this was back in 2008 when my mom was diagnosed, and I didn't have a lot of tools. I didn't have really any tools to make my job as a financial caregiver easy. I had to play detective to figure out the details of her finances. I had to frequently log on to her bank account to check her spending and to make sure she wasn't making mistakes. I had to sort through her mail to intercept all of those donation requests that she was getting to make sure that she wasn't writing checks to each and every one of them. I had to be there to intercept phone calls from scammers who were telling her she had to wire money to claim some prize she supposedly had won. I had to get involved, and I thought I had gotten involved soon enough. But I recently realized that I had not gotten involved soon enough. My mom passed away last January, and this December, I finally got around to going through this big box that she had full of documents, tax returns. And these were documents from when she was living independently and before I got involved with her finances. And there were tax returns, and there were financial statements, and there were bills. And as I was digging through all this, I came across a collection notice from a medical office. And I found another, and then another. And these were notices from 2005, 3 years before my mom's Alzheimer's diagnosis. You remember that study that Todd mentioned from Johns Hopkins? Researchers found that those with Alzheimer's and related dementias show a pattern of missed and late payments up to 6 years before a diagnosis. I knew that those collection notices that I found were a result of my mom forgetting to pay her bills. I knew then that she was part of those statistics. And I realized I had not gotten involved soon enough in her finances. So I shared this story with Careful's co-founder, Max Goldman, and I was telling him how guilty I felt for not getting involved soon enough. But I also let him know, there was no Careful at that time. And I wish there had been, because it would have been easier for me to keep tabs on my mom's finances. It would have been easier for me to protect her finances. But that technology just wasn't available back then when I was starting to get involved and before I even did get involved. Now, unfortunately, my story is not unique. I have heard lots of stories like this, stories about parents who forgot to pay the bills because of cognitive decline. In fact, one of NAIFA's own, Brian Holtz, has a story like this. Brian, who is joining us here today, he has a long list of designations and accomplishments, including frequent industry author and speaker, a NAIFA member for more than 3 decades, NDRT top of the table member, registered principal with SagePoint Financial, and current NAIFA president-elect. He and his team of advisors have been building brighter tomorrows in Tampa Bay since 1983. So I'm really excited to have Brian here today to share his story with you. Brian, welcome.
Thank you, Cameron. Great to be here.
So, Brian, I know that you discovered that your father's long-term care insurance policy had lapsed because he had failed to pay his annual premium. Can you share this story?
Absolutely. And as a quick preface, when you were sharing your story, I didn't realize how closely aligned our stories are in so many ways and all the experiences we shared with our parents. My father is a very successful businessman and has done very well over the years in several types of businesses. He had a lot of properties and real estate. And we always thought he had things well taken care of. And so being my father, I respected and didn't want to do anything that he didn't want to cross any line. I always gave him a wide berth to do what he thought was best regarding his insurance and investments. And so I kind of knew he had this long-term care policy. He'd had it since the early 2000s. It was a great policy. It was with about the best you could get, very robust benefits. And I just presumed that not only was he on top of the payments, but also that the current state laws and other protections that we fight so great for as NAIFA members and advocate for would protect him against some kind of lapse. However, that wasn't the case. I'd found out that he was paying it on an annual basis. He'd moved shortly after retiring at age 80, the young age of 80. And it was really quite a ways after the fact that we found out that it had indeed lapsed. After going through some materials, going through some information, Dad, how are things? It was really way too late when we found out.
And I think he was really fortunate to have you on his side, because I know you went to bat for him, right? I mean, you got involved at that point, and you and you didn't let things just stay the way they were. I mean, you took action.
Well, Cameron, we're very fortunate. My family, my sister's an attorney, my brother's a nurse, my other sister does claims for a health insurance, an insurance company, and of course, I'm an insurance and investment guy. We thought we had all the bases covered, but we didn't. The cobbler's parents, in this case, didn't have the shoes when they needed them. So we did finally take over a year to go through it and get everything reinstated fully. But it was a very long process, and we're just very fortunate that it happened. It could have very easily gone the other way.
Certainly. And I think most people wouldn't really have the know-how to do what you did and to get involved. I know that you told me, though, that this wasn't the only financial mistake that your dad had made. He was experiencing cognitive decline, and he was missing payments on other bills too. Can you share some of those other things that you discovered?
Cameron, my father, was always and still tries to be very independent. So I would visit him very regularly, and we knew that things were slowing down. So I would go and I would see the stacks of bills, and I would see just, he became somewhat of a hoarder with notices and things. And I thought, this is certainly not him. And I would find occasionally every month or two, I'd find something on his door from the electric company saying you need to pay your bill. I thought that was odd because my dad's great at paying bills. I'd find stacks of notices from charities, and I'd finally gone through his checkbook and found out he wrote just dozens, perhaps hundreds of checks to people who are scamming seniors like my father. Perhaps the most greatest realization was about 2 years ago, just over 2 years ago, our family gathered at his home for Thanksgiving. Recognizing he wasn't much of a cook, of course, we brought the food, but we'd found out that there was no water that Thanksgiving because he hadn't attended to that. So it really blew up in our face at that point and found out that he really needed help. We really needed to be there. And as you said, we'd gone through more papers, and the more we looked, the more unpaid bills and notices we found, the worse it had been, and we just hadn't discovered that. So the sooner the better. My goodness, it was just a really, really cold reality when we found out how bad it was.
Right. And it does sound like your story is so similar to mine. And I've heard so many stories like this, and we often are reluctant to get involved until we have to. So I was hoping you could share with the other NAIFA members who are here, what can they learn from your experience?
Well, first of all, it's just wonderful that a company like Careful exists. I love the name, and obviously it's because we care for our families, and we need to be careful with our families and our clients. As financial professionals, financial caregivers, it's so important to make sure that we follow that through as much as we can, as holistically as we can. I love the fact that we want to empower them to transition through this process. Our clients are experiencing Alzheimer's and dementia. So the first thing is the powerful message of serving our clients and their families well, creating legacies, making sure that they're taken care of and that legacy continues, whether it's financial or otherwise, just that they have the dignity with their family and through as they go through this process. So number one is ensuring that we take care of our clients and do a great job with the tools available like Careful. And of course, the second one, as I hinted at before, we need to make sure that as professionals, we take care of our families first, that we're not the cobblers with the kids or parents with no shoes, that this is certainly something we could all benefit and learn from. And as I think we all know, the best advocates for any given product or policy or service or anything that we do is experiencing it ourselves. So those, I think, are the two takeaways. And I'm just so glad to hear of this partnership and this product and service. This new way of caring is available. So thank you for that.
Well, thank you. And thank you for sharing your story. I really appreciate it. And I hope the NAIFA members appreciate hearing from one of their own about how this can really affect anyone. No one is immune from what can happen to our parents and to ourselves as we age, and what can happen to our finances if we or someone out there isn't looking out for them.
Amen. Thank you, Cameron.
Great. Hopefully you can see and hear me again. Thank you both, Cameron and Brian, for sharing. One thing I'll bring up here, we have seen now, we've been at this for quite a few years now at Careful, and one thing that is common is everybody gets here, whether you are really unfamiliar with finances, or you're a financial journalist as Cameron is, or you are a top level financial professional as Brian is. Everybody gets here, and yet almost everybody kind of is surprised and feels alone, very, very alone when this happens. We see this over and over and over again, and the trigger moments are often the same. The bills. I find the bills. I want to give my mom or dad some space, and then I find the stack of bills. And then it almost always starts with, and then I find the stack of bills, or there was an incidence of fraud or mispayment. So if you know someone going through this, or I can guarantee you have clients and prospects who are going through this, because everybody does, right? It's very, very common, no matter where they are in their financial journey. Second thing that's important is the idea of keeping them independent and in control. So what you're not hearing is, okay, the next thing to do is to take over their finances, but just to give them a second set of eyes and create that kind of tool and infrastructure is a little bit of what we think is most compelling about how Careful fills the gap here in between I totally take over for somebody and they lose financial independence, or I offer them something that enables financial independence. So I would suggest really that you think of Careful this way, as foundational, core relationship building infrastructure for your practice. That's the idea. How do I build a groundwork to speak to both generations, to have an impact on families? And here's Careful today. And I'm going to show you a quick video in a second, but let's just drill down quickly. The first is smart monitoring, which is our AI machine learning engine. It's very data-driven, senior-focused, looking for the things that banks don't look for today or can't find. Does the things that autopay can't do by itself alone today. We're looking for things that disproportionately affect older adults. So yes, duplicate payments or strange uses of cash and missed payments, but we are looking for charitable contributions. In fact, we wrote that rule last year. It's funny that Brian brought it up. Charitable contributions are all over the place. They're not always intended. Sometimes they're scams. And when they are intended, they're often recurring. And older adults make those contributions without knowing that it's a monthly deduction. The biggest culprit there, political, right? Both political parties convinced older adults the world was ending and they needed to sign up for recurring donations. And so we look for that. It's very personalized for each person. So a $5,000 expense for your dad is not the same as a $5,000 expense for your mom. So we look, we get a sense for what normal behavior looks like and look for changes in behavior, in addition to things that look like fraud or strange money movement patterns. This includes things like gift cards, the things that you find when you find the stack of bills, pharmacy spend. If it drops, it actually means you may not be taking care of yourself. So we have a full body of technology here that's looking for things, lightly looking for things that look like either fraud, mistakes, cognitive decline, or even bad behavior from someone within the trusted circle. It's number one. Second thing we do is what we call impactful conversations, a chat feature so that you can share alerts, sharing objective data with your advisor, with your family, the siblings. We like to say right now people are just sharing passwords and getting into each other's accounts. That's where the fraud comes from. We think the right thing for this industry, and we are real advocates here with the Consumer Financial Protection Board, with the American Banking Association, more eyes on things, less hands in things. And so what we enable here is conversations to get to fixes. Look, mom's had a pattern of missed payments. Can you see this? Not mom's losing it, right? So that's which causes a fight. That actually isn't very constructive. So second thing we do is enable these conversations. Also enables advisors to step in and say, actually, without having to monitor every day, advisors can step in and say, actually, I'm seeing a pattern here, and check in, make sure policies are paid, things don't lapse. The third is roadmaps and advice. You heard from Cameron, but we teach and educate about what to do next, when to get power of attorney, how to do your parents' taxes, how to look out for these scams. We've been writing on this, led by Cameron, for the last 2 years. And we have quite a bit that's helpful here and available to our advisors and partners. You'll also see here advisor views that allows advisors, brokers, wealth managers to do this at a practice level and see everyone on their practice at once in a very simple, kind of very low engagement way. Turn it on for your practice, and in about 5 minutes, you're set. So with that, I want to show it to you very quickly. I'm going to show you a 2-minute video so you can see what I mean. We'll show you the mobile version in action, and then we'll move on.
Is everything okay? That's the money question that matters for older adults and caregivers. People want to get back to their lives, jobs, and kids, not dig through finances. So Careful shows a person what they need to know. The app opens to either a calm state or an alert state. A calm state signals that everything is okay. The alert state calls out anything that requires your attention. Note, everything is not an emergency. Careful monitors your credit and scans the web for misuse of your personal data, while also looking for everything the banks don't look for. Anything that targets older adults, whether that's a scammer, misuse of funds from someone you trust, or just a money mistake that somebody made themselves. These are the transactions that look ordinary on paper, but actually plague older adults. Careful looks for mistakes like charitable contributions, which can be recurring, unusual transfers or merchants, which can indicate a behavior change, potential late payments, gift card purchases, missing or additional income, and many, many more. And with every problem comes a one-tap solution directly in the app. Users can share alerts with the account holder if they want to remind them to pay a bill, for example, or start a chat with their circle of trusted stakeholders to discuss and resolve the mistake, so everyone sees and understands the same thing. Users can go deeper on their accounts in the Activity tab, exploring everything from cash trends to the biggest transactions to the highest billing merchants. Finally, the Learn tab offers real answers to real questions. This forum of experts and Careful members is led by our head of education, journalist and financial caregiving author Cameron Huddleston. The community is perfect for specific practical questions, as well as broader discussions about the experience of handling aging money matters. So that's what people get from Careful. A smart second set of eyes on everything that matters to older adults. Assurance that everything's okay, alerts when something's up, and the answers and how-tos needed to navigate it all. When you use Careful as a part of your business, you manage it in the Careful Pro dashboard. First, use the Pro dashboard to invite clients to Careful. They'll get a customized welcome from your practice with your own brand and a personal message. Once you've invited your clients, you can track their activity and alerts to see whose accounts are on track and which ones may be in need of a check-in. One simple overview with every single client helps you save time and act when you can have the most impact. Learn more and start your Careful Pro trial by clicking the button below.
Oops. Okay. So, all right. Hopefully that came through. We have people that you saw the mobile version. We have our older adults typically like to use the desktop version, so it exists on both. But let's just talk for a second about how we work with practices and partner with advisors to help kind of on this relationship building infrastructure that we've been talking about. We at a certain scale, we stand up a safe. We can stand up a safe money monitoring site for your practice. This is a live one from Citizens and Northern Bank in Pennsylvania. They've stood this up. You can click on this and go straight to it. It's branded with your practice, but it's our technology, our product, and our content that we update every week, so that you have something both to a place to drive people to check it out. Everyone likes to kind of kick the tires, but you also have a home to say, look, this is something that we care about, and this is a place where you can learn more about it and sign up for the tool, and winds up in a way giving the credit to your practice. And so this is something at a certain scale we stand up in about a week for our companies and advisors that we partner with. It's also creates quite an opportunity for cross-sell, as you might expect. Once that relationship is in place, it's the business building that goes on top of that relationship, whether it's long-term care insurance. There are banks rolling out checking accounts powered by Careful, trust companies working on products as well. So whatever the offer, once this conduit is open, it's a very kind of dynamic channel through which to speak to people who are already on Careful. They're giving, advisors are giving this away to keep the assets and serve the older adults they have, while giving them time to attract the rest of the family. Because when someone adds their family to the circle, what we call a trusted circle, we can see that, and I'll show you that in a second. So then you have the family members that you're able to reach out to as well. The idea here is, instead of slowly losing one client, you keep that client and actually turn one client into 3 or 4. And that's a bit of how we think about it and what's been successful. Just I'm going to show you just 2 shots of what it looks like, 2 or 3 shots of what it looks like from the advisor view. But I also want to say here that we have a chat feature open here. And if you do have a question, however technical, however, how does this really work? Secure, how secure it is, how secure it is, how much work it is. If you have questions, there are no dumb questions. Everybody has them, and 2, very happy to answer them if you drop them in the chat. Michael is monitoring it, and we'll save a few minutes at the end to answer as many as we can. So please drop a question or 2 in there if you'd like. Giving you a sense of really quick and easy way, add a client email to invite them from your practice. They get an invitation with a note from you and your practice. We've used Nationwide there, but you get the idea of this is you getting the credit for offering that infrastructure. And what I want to say here is, careful, we showed you a lot of what it includes, but it also includes credit monitoring and some core identity theft protection, $1 million of identity theft insurance. So this is the kind of thing that's becoming really, we call table stakes. Like after, frankly, after age 50, 55, you should have it for yourself anyway. And so this is somebody that's used to paying $15 a month, maybe for credit monitoring, that to get about 3 times the reach and breadth and value from Careful. It's a pretty impactful thing to get. And so the invitation comes from you with a note from you, and that advisors have told us that's quite an impactful way to offer it versus just directing people to it. When someone is on there, as I mentioned, you can see who's in their circle. You can see who's getting alerts, and that expands what we call share of family. Right? The opportunity is not just a deeper relationship with one person, but it's a deeper relationship with their circle. So you can build your business based on that. And then at the end of the day, it's one view. So this is not something you need to manage every day. The world has enough dashboards, but it is something you can check in on once a week, once every other week, and just get a sense for who's getting a lot of alerts. Is there an opportunity to have an impactful conversation? You don't have to receive every alert, and frankly, you wouldn't. All that information would be stored here, and you could just get a sense for who's getting what. Gives you a nice opportunity to play that partner role. I mentioned the content. This is also in the Pro dashboard. A lot of people use this just for the content, but it's how long will your parents' money last? What to do if you can't pay for long-term care? How to guard against elder fraud? How to pay off debt in retirement? It kind of goes on, and we make it very easy for you to send those things from your practice to a client or to a prospect, or as part of your newsletter to put a link into things that you're already sending. So we want to be your content for financial caregiving. And that's one of the reasons why we're a content partner with NAIFA, because we write so much about it, and we believe there's a good fit there. I want to take 2 minutes actually and show you something now. Careful is being used by a lot of different financial professionals, a lot of different types. Not everybody is in the daily transactions like daily money managers are. If you know the daily money manager cohort out there. I'm going to show you one though, just to give you a sense of people that are in it and using it. It'll take about 90 seconds. And we did a video interview with Jeremy Noctegal, who's a daily money manager, just to give you a sense of the kind of things that he's been able to catch in his practice. That's probably a layer deeper than a lot of people on this call would want to go, but I want to show it to you anyway, because it's out there in the world.
Because this is a new field, it's very difficult to gain the trust of a client because you're not a name brand, right? To be able to lead a conversation with, I can offer you this type of protection, is very powerful. My name is Jeremy Noctegal. I'm the principal and founder of Daily Navigator LLC, which is a daily money management organization helping the elder community and their adult children. There's fraud taking place all over the country. It's being targeted to the senior community, which we all know. I just had a conversation today with somebody. They wrote a check to the Treasury, and the checks were washed, and then they were refilled out with a higher amount. Somebody cashed it. What Careful has done, it's given me something to hang my hat on. If I'm having an issue with a charge, with an account, as a way to provide evidence of some unusual transaction that I'm seeing, adding support to my position if I have to negotiate with a bank or with a credit card company. Unlike other account flagging tools, what's nice about Careful is the Care Circle, which allows other people in the family, let's say other professionals if need be, to be involved in the activities of a client that we're servicing. If there is something unusual going on in an account, that's flagged, and I'm given an email letting me know. That helps me in building my relationship with my client. One of these alerts noticed that there were 2 charges for the same company for the same amount of money within a week of each other. Well, upon further investigation, we learned that he had been signed up for another service at the same company, which he no longer used, but was unaware that he was still paying for it. Had I not had the app, and had I not gotten that alert, that's something that may have just fallen by the waysides. The one word I would use to describe my experience with Careful is fantastic, because Careful is really the first company that provides a service focused on the elder community and their adult children who are managing not only their own households, but also helping to take care of their parents. Because this is a new...
Great. So to conclude here, and then we'll open it up for questions. As part of our educational and content partnership, we have agreed with NAIFA to offer a NAIFA LECP only price through February 11th. And it's a big chunk, 25% discount for an advisor seat. Now, each seat allows you to use it for as many of your clients as you want. This is the model we've been really seen so much uptake with over the past 6 months. It's really kind of gone crazy. We have bank I will say here, because I want to, in the spirit of our partnership with NAIFA, we have bank partners, we have insurance partners, we have a lot of practices who are in the queue to be onboarded. We're growing like crazy, but we are not yet a huge company. And so that means we pick our partners really carefully. And we do that by membership, but we do that by mission as well. And this offer is a real investment for us, because we believe that it belongs in the hands of the people who are on this call in this community. These are the people. This is the group that's already telling the financial caregiving story, whether they use the phrase financial caregiving or not. And you guys have been in it for a long time. And we think that we are in some ways 2 sides of the same coin here, that we fill a gap in for technology to help build relationships so that you can deliver some of these meaningful policies and meaningful services to build your practice. So as 2 sides of the same coin, we think we can build our businesses together. And we think we can really drive the building of your business. And so that's how we landed on this idea. Last time we did something like this, it was quite popular to the point where we had to cut it off. So that's why we were doing this for a month. But the email there, hello@GetCareful, and we're going to give you all this information as well as a follow-up as part of your attendees to show you how it takes just a few minutes to get up and running. But it's a meaningful discount from our daily price. We're going to take questions now on this or anything that we talked about, security, how it works, how we onboard. Really hoping that this was informative, that you get a sense of how technology can be a relationship driver and can set the groundwork for other big impactful conversations all the way up to dementia, to new products, long-term care insurance, or just frankly something to help so that you can bridge generations and speak to more of the family as you bridge the practice in those times when you're not selling, where that are not so transactional, right? And we think we can lay the groundwork for that. So I'm very grateful for your time and attention here, for Cameron and Brian as well. I'm going to stop sharing here for a second and see if we have any questions in the chat? Let's see. I see one comment on autopay. So this is great. So there's a comment on from Jules, as my dad's caretaker, I have all essential services on autopay, and also have security cameras set up and things like that. And we would say that is fantastic. Autopay is a big piece of the puzzle. What I would also say though, and this is what we found, is the gap in autopay is that banks don't necessarily know what to look for. So some of those sometimes you'll find older adults, the amounts change. So when things are on autopay, they don't let you know if the amount changes. And it's important for a technology like this to be able to say, hang on a second, this price went up 50%. That happens all the time. By the way, the utility companies are really aware of when older adults have been on for a long time, and they love to put them into to keep them and migrate them into packages that they don't belong into. So when there is an amount that's changed, it's not just whether they pay the bill, it's should they be paying that bill at all? Are they paying it twice? Things like that. So autopay is a wonderful first step, and Cameron recommends it. I know. At the same time, we argue it's not enough. The second reason why it needs to be supplemented is actually two. One, there are some things you can't autopay. Cash movements, the kind of people who help out around the house, right? Beyond utilities, there's a lot of people who are, particularly as people age, who are paid kind of in the broader in-home caregivers in the broader ecosystem. Finally, again, banks don't look for charitable contributions. So autopay sometimes is the problem. So when someone signs up for a political donation, there's nothing wrong with that St. Jude's ad. It is a very good cause. But everybody, when they see that commercial, 9 times out of 10, they give money, and 9 times out of 10, it starts to get deducted, and they don't know that. And what you find when you find what Brian described as like the stack of the bills, is you find some of them are scams, and some of them are really great organizations that they've been paying for years. Over and over and over again. Elections that have long since passed. And you see all of it. And by the way, it's not a one-off story, it's everybody. Right. So it's in between the gaps of bill pay where you see that. And sometimes it's the bill pay that needs to be shut down. So that second set of eyes is where we really see the technology that's built to look for things that affect older adults. Last thing I'll say here, knowing this is a slightly long-winded answer, fraud and mistakes are one thing to look for. But unfortunately, and I know this group sees it, right? We care just as much about what we call systematic drain from within the trusted circle. And those are people who have been given, in the spirit of helping, been given access to mom or dad's account to get in and help with something, and go shopping with mom's credit card, or help themselves, sometimes from a really good place because they are unpaid caregivers a lot of the time, and sometimes not from a good place because they can. Whether it's new friends, people from within the trusted circle. So it's that systematic drain that happens over years that is impossible to undo, right? And Brian had the resources to go back to that insurance carrier and get to some resolution. But the resources to get to someone who's slowly and systematically draining money from the account, when that's gone, it's gone, right? And that is one of that happens as much as, and it's also quite emotional and sometimes embarrassing for families. And there are not a lot of resources to help out there. So Brian, even in the chat, made the comment that his dad's long-term care insurance policy was on annual pay, right? Auto pay. So that set it and forget it stuff sometimes creates a lot of vulnerability as well. But it's absolutely a tool in the toolkit for sure. So thank you, Jules, for putting that question in there. Any other questions from whether it's in the chat or otherwise that we can about working with us, or how it works, security, anything like that? Good.
Good. Well, Todd, I learned a lot. Okay. You brought up topics that, frankly, I hadn't thought about. And I think that that's a really important aspect of, the center, that we do bring different and far-reaching knowledge to all of the NAIFA Nation. There's very few of us who aren't going to currently need this application or later need it. And as you said, it's less difficult to do this in advance than to live through what Cameron, Brian, and I am sure many of our other members have lived through. Yeah. Regrets don't help pay the bill. Yep. And they certainly don't help families stay, shall we say, stable, so that there's no infighting. It's an issue that deserves attention, and it's a difficult approach. Almost everything in the whole topic of extended and long-term care is difficult. So the fact that Careful offers us a way to make things not only less difficult for the parents, but for ourselves, for our families. And I love the fact and agree with you that this is an opportunity to look at your client in a more multi-generational way. The more they get to realize that you're in it with them, the more they're going to trust you generationally. So I hope that a lot of you will contact Todd or Michael or Karen and offer your stories. We will be highlighting some of these on our consumer website because, again, sometimes it's a taboo subject. So we thank Brian as a long-term member of NAIFA for sharing with other members so that they also realize none of us, even very professional financial advisors, none of us are immune to needing the Careful app. Thanks to everybody and have a great day. Bye.
Thanks,
now.
everybody. Have a great day.